Good morning, everyone. Welcome back to Coffee with Casey. I was away last week doing a little golf down in Myrtle Beach, but I'm back. And the market is really kicking in. So we basically have three main sellers markets, right, that we deal with. So the first one happens February 15th to April, first week of April. When everybody goes away for spring break, that's when the market takes a breather and it works into phase two, right? So the second phase of the market is April 15th to about June 15th. Okay, then we go into the summer market. But the two most powerful seller markets are the first part of spring, and now we're going into the second part of spring, right? So we're going to look back at the first part of spring and see what happened. What drove the market? It was very crazy, and there are new things developing, right? There are new things developing in the market that we need to be aware of, okay? So market timing and mortgage timing is different. I'm gonna have a mortgage banker on today, and we're gonna talk about the difference in some of the financing. So if anybody's doing mortgages or anything like that, or you're a realtor or a buyer, you really need to know this, because not all the advice is the same. As the market changes, advice changes, strategies change. So I'm gonna have Mike on here to help me this morning. So let's before he gets here, let me just take you quick to the screen, and let's go here. So the first thing we're gonna look at, last week we talked about the first 96, which means we've got to get this thing sold in the first 96. That's when the contracts are the highest and best terms and all that stuff. So we talked about preparing the home and the pricing strategy, marketing plan. The question this week was, why do you have to get it under contract on Monday or no later than Tuesday? Well, that answer is really simple, because the next shiny thing comes on the market on Wednesday. So let's say that somebody's been looking at our house, they've looked at the house, they've come to the open house, they're going into contract, they're fighting for this contract. And let's say that they emotionally start becoming detached from that house as time goes on. Any salesperson will tell you that as time goes on, that buying urge drifts away, right? So that's why you can't walk out of a car showroom. They know that if you walk out that door, you're not coming back. So they try to close you on the spot. So same thing kind of holds true in real estate. We want to get that thing closed on Monday, no later than Tuesday, because on Wednesday, the new shiny things come on the market. You're going to start seeing new coming soons, and then they start drifting away and going, hey, look, there's the house, blah, 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 blah. Now, they can't see that house for a week. So they're going to have to wait to get in that house for 1 week. By that time, that buyer pool is swum away. They're gone. So it is important that the home be prepared correctly. The pricing strategy is what it is. This week, I had sellers that have been trying to sell a house since 2011. And every couple of years, they'll bring it out and it doesn't sell. And every couple of years, they bring it out and it doesn't sell. So we finally took over the listing. And sure enough, in the first weekend, we sold it. And we sold it at a good price, what I would consider to be a great price. Last week, we had 3 listings come on before the Easter one, the week before. We had 3 listings come on, worked our tail off on all 3. All 3 went under contract in the first 96. In fact, every home we've listed in 2023 has gone under contract in that critical 96 hours. So when I say we really need to lock this thing down on Monday, no later than Tuesday, that's because I know what's coming. The buyer pool is going to drift away when the new inventory starts coming on the market. So that's one thing we want to be concerned about. Okay, let's take a look at the first quarter. And I hate it when I do this, because let me see if I can make it so you guys can see this. All right, I hope you can see this. So basically, in the first quarter, that first selling period between January 1 and April 15th, this is the inventory in all of the markets. Vienna's inventory was down 40%. You can see this is a dramatic decrease across the board in the inventory that's on the market right now, right? Or they came on in that first period. Now, in the last 30 days, that's what's happened, right? So it's getting better. It's getting better. It's not getting worse. It's getting better. So in the last 30 days, this is what happened versus, 2022. All right. So, it's getting better. It's not great. We're still down 20, 30%. Still, it means it's a great time for the buyers, for the sellers to get their houses on the market. This is the inventory. If I just looked at the inventory in the last 30 days for one subject market like Vienna. So look at here. In 2018, 91 homes in this period went on the market. In 2019, 127 homes went on the market. 2020, it was 90. 2021, it's 96. 2022, it's 75. This year, it's 71. So if you look at that, that's a huge decrease from 2021 and a massive decrease from, the market prior to the pandemic, which is, which was when the last, I would call it normal market was that we can track. So it was 127 back then, it's 71 right now. That's why, let me get rid of this. That is why the sellers have control of the market. Now, every Tuesday and Friday, I check that market, right? And I go on and see, because not all markets are the same. Let me find out where you guys are here. Let me get back to Zoom. Not all markets are the same. Like Centerville between 750 and 1 million may be in a serious seller's market. Vienna between 750 and 1 million may be in a buyer's market. So what we do is we do a market snapshot for all of the markets that we participate in, that we're really big in. And you can see on a weekly basis how many actives there are, or how many actives there are, how many pendings there are, or how many pendings there are. So by looking at this, it gives us a read of not only what is a house worth when we're trying to price homes, but what does the market look like? I mean, are we in a buyer's market? Are we in a seller's market? What's everybody getting for that? Now, let me tell you a little problem that everybody's going to have right now. I'm not sure how it happened. I'm not sure what happened, but we're going to find out. But the assessments were going along pretty steady on the Fairfax County tax assessors. Something went wrong. Somebody bought a liquor bottle to the assessor's office. Everybody got toasted and they came out all over the place. I mean, sometimes we have assessments that went up $250,000 or $300,000 on a house between 2022 and 2023, right? Well, it's an indicator. What is everybody selling as a percentage of their assessments? Some homes went up $250,000, almost $300,000. Some homes went up $17,000. Now, I'm not sure what liquor they were drinking. It probably was Jack Daniels, but the tax assessments are unreliable at this time. You cannot work on, we cannot work on those assumptions that if everybody's selling at 108% of assessment, we should be around 108% of assessment. So that is no longer a reliable tool that you use. So what do we use? We go back to the old days where we went, a house that's 4,000 square feet that was built in 2010 sells at X amount of dollars per square foot, adjusted size and age. So we know exactly what they sell as a price per square foot. Then that gives us our customary value, the middle of the seesaw, right? So then the adjustments, the upgrades, the condition makes that house go more valuable, or lack thereof makes it become less valuable. So we can still lock in our customary value by going to price per square foot. We already know Zillow and everybody else is unreliable for giving us a price. We have to do it by hand, but I'm saying there's been a dynamic shift in how we have to do this. And that may cause an even bigger swing when you talk about algorithms in on Zillow and Realtor.com and all that, Realtor Property Resource. Okay. All right. Now, So that's an update on the real estate market. I want to talk about the mortgage market now, right? So I have Mike Filan with me, who's from First Heritage Mortgage. He is has been with our team now probably for 10 years. Any problems, issues, updates, anything we get comes in from Mike. We did have a conversation on our morning huddle on Monday, and it sparked a conversation that was pretty dynamic. And I wanted to invite him on the show, and I want to talk about the market, right? I want to talk about the mortgages for a second, okay? They drove the market. They literally shut the market down last fall, shut it down by interest rates rising. Now they're floating back down. And now what I want to do is we'll talk with Mike about where they are, where he thinks they're headed. And here's what really started this, right? So if you went to Mike and said, Mike, is it better to get a 30-year fixed or a 7-year or a 10-year? It depends on the market, because sometimes there's a very big spread between a 30-year fixed and a 7-year arm. Sometimes there's not. So in times like this, it's best to go with 30-year fixed. Times like this, it's best to go with 7 or 10-year arms. So let's get up to date on the mortgage market. Mike, how you doing this morning, buddy?
Hey, good morning, Casey. Apologies, I logged out and I logged back in and I can't hear you at all, but I'm just going to go ahead and touch base on what we had spoken about previously.
Are you a lip reader?
I can't hear. Can you hear me?
Turn your volume up. See if you can turn your volume up.
I'm sorry, I can't hear you at all.
Okay. All right. Go ahead. Go ahead.
Okay. But what we had talked about earlier with timing being everything, and forming a strategy at different times is just so crucial. And where it seems that inflation has peaked, and inflation's been the hot topic over the last 2 years. We are in a spot right now where it seems inflation's peaked 6 months ago, and rates are trying to creep lower. And while we are looking at things as professionals constantly, right now it seems like the big opportunity over the last week or two is to hedge your financing. And while typically, paying a point, you'll recoup that cost of that money in 4 to 5 years. Right now, paying 1 point, you can recoup that cost in, say, roughly 2 years. So usually paying 1 point or 1% of the loan amount will get you about 0.25% in interest rate and improvement. And right now, paying 1 point will get you about 0.5% or even 0.625% in interest rate. And that's a huge savings. And so while we don't know if rates are going to continue to go lower, if they do, that's great. It's an opportunity to refinance, as things move along. But, being able to recoup the cost of that point right now and improve your position, to hedge your position, is just a massive savings. So
yeah. All right, I'm going to cancel. I'm going to just go ahead and cancel out. I'm going to take it from here.
Yeah, I'll let you guys go.
All right, bye-bye. So let's talk about what we talked about before on the mortgages. Basically, what he's talking about is, let's say I'm going to get a mortgage and the mortgage is, say, 6%, and I were to pay a point, right? I could buy the rate down to 5.5%, that 0.5 point. So if I paid that for 2 years and I'm saving 0.5 point per year, I make back that point in 2 years, right? So I make it back really fast. Now, sometimes that spread, that point will only buy you 0.25 point less in rate, and then it would take you 4 years to figure that out, right? So when you're going to a lender, you have to ask them how the market's doing at the time. What is the difference between the 30-year fixed and 30-year fixed with a 1 point buy down number? That's the first thing you can look at. The second thing you can look at is, what's the spread between a 30-year fixed and a 7 or a 10-year arm? Sometimes there's very little change. Other times the market is down here, and now it's a great time to do a 7 or 10-year arm. So I guess what I'm saying is that when we're dealing with real estate or financing, right, we have to have all current information. So this process is a data gathering thing. When I'm trying to price a house, I'm just gathering data, man. I'm going in and I know the price per square foot, percentage of assessment, the crazy assessments that are going on. And I know the condition and the market conditions and all of this stuff. You're data gathering, right? And then once you have all the data, then you can determine what is the right price that we want to put on this house and test that. And, you know, to be honest with you, sometimes we try and test a higher number and it doesn't work. So we have to go to the lower number, and that works like a charm. Like I said, every house we've done this year has sold in the first 96 hours, which is very, very important, right? Now, had we went out and listed the house at a higher number and had no buyers coming and had nobody looking at the house, then our house would be sitting on the market for an average of 45 days. I'll tell you how I know. In 2023, if you sold a house between 1.5 and $2 million in that market, we have a 25% market share. Now consider there's about 2,100 agents that sell houses in Vienna. 2,100 sold a house last year in Vienna. So the 2,100 agents, we have a 25% market share. All of our houses sold within an average of 4 or 5 days. The average for the rest of that market was 45 days. And that's why we are at 25% of the market, because our homes sell. And, you know, why is that? Because this is not a hobby for us. It's just not a hobby. This is my life. This is my job. This is my profession. This is what we do. So, you know, everything you do, when I talk about the first 96, the preparation of the house is critical. Let me give you a perfect example. It's not me. It's Kelly, it's Morgan, it's Billy, it's Pam, it's Pat, it's Colby. It's the agents that work with me. So we got a bunch of 30-somethings that work. So when I show up at a house, it's me and it's another agent. Well, we walked into a house that's 6,000 square feet above grade. It is a massive house. Beautiful house. Wait till you see it when this one comes on the market. It's going to be awesome. It's painted yellow. So looks fine to me, but doesn't look fine to a 30-something. So they're painting that house. Now we've seen it before. Morgan and Colby walked into a house and I looked at it. I said, looks fine. They said, nope, we're going to paint this house. And I was concerned because the market we were in, the average home sold for $975, but it took 85 days for them to sell it. This is over in Penderbrook. So they came in. I said, we're going to paint it. There's no question. We're painting the house. So we painted the house. They fixed it up. They decluttered. They did whatever it is they do that sets it up for a 30-something. That home sold in the first weekend for $195,000, $145,000 over list price. And the seller and I at the beginning were like, we got to paint this place. You know why? We don't want to do it. We're old. We're tired. We don't want to paint a house. Guess who else doesn't want to paint a house? The buyer pool. 9 out of 10 people don't want to do it. Is it hard to do that? Yes. If I was working by myself, could I manage everybody's house getting painted? No, I could not. But let me tell you this, that house would go off at about 1.825 with yellow paint. We're going to start it, or probably go off about 1.8, maybe get 1.825. With the paint, it may cost $10,000, $12,000. I don't know how much it costs to paint a big house like that. Probably about $12,000. We're going to start at 1.85 and we'll get to about 1.925. Mark my words on this. This is over off of Old Courthouse, and you watch. So Morgan put her foot down, and Morgan and the seller and I are like, I don't want to, that's a real pain in the ass. So she put her foot down, and we're going to paint that house. And when we paint that house, it's going to sell for $100,000 more than we would have got for it. That's power. That's the power of preparing the house. The one couple got $145,000 in the first weekend and all of their neighbors took 85 days to sell, and they averaged 975. That's the power of preparing the house. So I can tell you things that are happening right now. You know, this in the last 2 days, I went and met with $9 million worth of sellers. They're all going to go with us. They're all bringing their house on the market. They'll all be coming on within the next 30 days. Beautiful homes, big homes, very nice homes. So, you know, and each one of them, you know, what is the key? Let's just say I was working by myself. There's no way I can do this. But our team is set up so that I can do all the pricing and I can oversee everything, and the systems and the processes are all in place. But it takes that agent that's with me, the most important person in the transaction, because they are the ones that have to arrange the painters, get in there, tell them what colors, what they're going to do, supervise them, listen to anything. If they spill paint or get something wrong, they're going to have to take the heat for that, and they know it. But they also know that our track record is, if our houses sell 8% higher than everybody else, there's a reason for that. And I will tell you the reason for that is the older agents don't see it. We just don't see it. I don't see it. Pat doesn't see it. Lillian doesn't see it. Casey Margano doesn't see it. You know, we're too busy. We don't have time for this stuff. House is fine. Put it on the market. Let's go. But if it had Revere pewter, if it had Edgecomb, if it had Seafoam in the 2 rooms, if they staged it correctly, and I don't mean staging and paying money for that, I mean rearranging furniture and thinning things out. It's just a focus of thinning out. If there's a key to our success, it's 2 things. One, the way we prepare homes, and I'm going to, so if you're a Samson Properties agent, you listen to all of this, right? I have a series that we're putting together called the First 96. I've already taped the first session, right? Tape the first session. The next session is going to be preparing the house. You know, how do we get this thing done so it sells in the first weekend? So I'm going to do Coffee with Casey live from Samson Properties studio. And I'm going to be doing that next segment, which is preparing the home. And all the agents are invited. If you want to come in and ask questions when we're over and go over it, or be there for the taping, and you know, you watch Coffee with Casey a lot, we're going to do it live at the end of this month. And actually, we're going to do it live at the last Thursday of every month. So you're not going to see all my pictures behind me. You're going to see this cool studio. Justin's got a beautiful setup over there. So I'm inviting you that if you want to come and sit in on that, preparing the home. But I will tell you that every time we do this, you know, it works like a charm. So it is very difficult to walk into a home that was painted 2 years ago with yellow and tell them it's not current paint. And the reason why I acquiesced to Morgan and Colby and Pat and not Pat, but Colby and Billy is because, let me tell you something. Every time this happens, the sellers gush with how beautiful the house is and how everything looks great. And then they sell, and they sell at a premium, and the sellers are happy and everybody's happy. So around about 2 years ago, the old fart decided, I'm out. You know, you guys want to do what you want to do. And the only reason is that I could authenticate that what they did brought in so much money that it was 7 to 10 times the investment. So when we go into a house, we never talk about expenses. It's always an investment, right? And again, you know, I was in one of the houses and it had the brass hardware, and I said, you know, we're gonna switch the brass hardware out. And the guy says, well, that's a suggestion. It's not something we're gonna do, but it's a suggestion. And I went, yeah, it's a good suggestion. And then the sister, who's involved in the transaction, she came in and said, oh yeah, we're changing out all this hardware, right? Yeah, we're changing out all the hardware. So, you know, there's no question that the hardware and the paint, and if for some reason you can't do the hardware, you must do the paint. A house has got to be sexy. There are homes on the market, like I said, let me be clear on this, between 1.5 and $2 million, the average days on market is 45. So they don't fly off the shelf. They don't fly off the shelf unless you've prepared them and priced them and, marketed them to the right people. So this segment that's coming up is more on the preparation of the home. But I will tell you this, there's a reason why they go in the first 96 hours. And I would say the preparation is probably one of the top two reasons. The next reason is the predictive analysis. So as we're bringing it out, so let's say every house I come to, we're in a $50,000 quandary. So let's take this house. We're somewhere between 1.6 and 1.65. The home's been on the market every 3 years since 2000 and blah, 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 since 2011, blah, blah, blah. So I'm looking at it going, look, the damage has been done. We got to stay under 1.6. We got to stay under 1.6. We got to stay under 1.6. The seller acquiesced, digging in at 1.65, but eventually acquiesced to 1.6. Sold. It sat on the market for hundreds of days at a time over the last bunch of years, but the seller acquiesced to that price. We went on, we got 40 people in there. Why is it important to have a lot of people involved? Because there was only 2 real buyers in that pool, and they saw 40 people at the open house. I was there. They saw a lot of people walking in that house and talking to me. And when you've put your claws into a house and said, this matches space, feature, function, this matches everything that I'm looking for, this is my house. They've already moved in. I know it. I can see them moving in. And they see other people in the house talking to me, and they're getting jealous and they're getting anxious, right? So that forces them to come into a highest and best number that was over list price. The home sold for over list price. So setting up the home is good. Predictive analysis is good, right? Now that home that didn't sell all that time, we've been telling them, you got to fix it up, got to fix it up, got to fix it up. They had it on the market for 1.45. They pulled it off the market. It did the fix up. Put it on for 1.6 with us, sold above 1.6. So preparing the house, predictive analysis, look both ways before you walk in the street. That's what predictive analysis is. So for the Samson agents that listen to this, the series is going to be the first 96, and it's the critical time frame, right? We're doing it. And again, if you can pull a 25% market share in a market, that's just a team. That's not the company. I mean, I'm going to look at it. I don't think any other companies have a 20% market share, much less a 25% market share for one team. It's not bragging. This just means that first 96 is powerful, right? It's powerful in every which way, right? So, so you agents at the end of the Thursday, at the end of the month, you can come in and listen to the Coffee with Casey. We're going to do the next phase of the first 96. It's going to be five videos total. You'll have access to all of those at Samson University. So you can go behind the firewall. You can go look at all the things, but I'm telling you, this is some powerful stuff. And there's a reason why Samson Properties is going like this and Long and Foster went like that. Big reason for that. Because Donnie works very hard, and Sarah works very hard getting educational stuff for the agents. But they're always up to date on stuff. We work very hard on education and all our agents. And my portion of that is, how do we sell houses in the first 96? Because that's when you get the highest price. That's when you get the best terms. No home inspection. Imagine that. House on the market last at 1.45. We got over 1.6 without a home inspection. It's a 5,500 square foot house above grade. It's a massive house. No home inspection, right? So basically what we talk about on Coffee with Casey helps you achieve those goals. My name is Casey Samson. You can reach me at 703-508-2535. And hopefully this helps you understand the market, what markets are buyers markets and sellers markets, and how we operate and how we price and how we get things done in the first 96 and how we prepare homes. Hopefully this gives you an insight into what one of our teams do. And whenever anybody gives me information, I authenticate the information by saying, how much business do you do? Like if you do 20 deals, all ears. You do 2 deals, none in the market, none over $1 million, I just can't authenticate that advice. Okay. So hopefully we've authenticated our advice here on Coffee with Casey. We'll see you again next Thursday. If you need me, give me a call, 703-508-2535. See you again next week. Bye now.